Welcome to TradeTheMBI.com. This is John. This report is for the 22nd of April and post-holiday for the markets. Hope everyone had a nice little break there. We'll take a look at the NASDAQ as we scroll down. It was kind of still a little bit of light trade on Monday coming off of the holiday. Not a big surprise, really wasn't anything happening from an expectation standpoint. As we roll through some of the numbers, you can see some of the mixed bag that's taking place. It's not a bad situation when you have that because it indicates that there's still some that are in sells, some that are in buys, and usually you get that little slow ebb up with that. So that tends to be a nice read. And with where the indicator readings were, right on the precipice, so the continuation is important in order to improve those. And we'll take a look at those. Still quite a few sells on some of these mid-range flyers. I know we start earnings, so that's going to create some added volatility, which is always fun. So if we look at our daily coming off the buy, we had the cross of the cyan, which was an early warning for some weakness, but the fact that we had the red crossing into a new zone, definitely strong enough to keep it going. We need to see that transition, because if that steel does dip below here, then you would expect a stronger negative. The fact that we had the crossover, but steel was still well above there and not even crossing below. Now if you get a flattening of the red, you've got weaker bulls. You would need to see the green pick up strongly, and you would need to see the cyan come back down. So the potential is with this cross that we could see a little more weakness coming into Tuesday there. So that's kind of the beginning read, but overall you're still within your buy cross in general. But this probably is going to lead to a little bit of negativity. If you go back to the last range, would be right over here in early February. And you had a similar kind of effect where you came up, but you had this strong move of the red going through there. So even when cyan crossed back over, it wasn't until right over here that took place. We got the little warning when you had the dip of the steel go below, and that was the first indication that you could potentially have some weakness. But very shortly, right after that, immediately the cyan started to roll lower, which just did not give any support to adding for shorts, and because of that, gave the opportunity for steel and green rising. Kind of propelled the market sideways. A little bit choppy though, so that's kind of where we're at now, and it's a little late. We'd have to look to see if we have MACD buyers in this situation yet. Yeah, they're just about there. Yeah, in fact, they're just getting their buy signals, so that would make sense that we may see a little bit of selling within that range. I know, it's so odd because you're like, what? That's a clear indication of buyers. No, it's not. Those are just moving averages, and they're always late. It's just the inherent nature of what they are. So we can see from the NASDAQ, still not as strong as the other markets from the read, even though it's been rising, still didn't break into the new range. And if this begins to turn there, you're going to be looking at retesting those lows. Just so you're aware of it. The Dow has been strongest of all of them, even though it hasn't been at the same high peaks. We can see that we've been in the deep negative red coming off that. So as soon as this continues to trigger, we may even see it as early as today, the beginnings of some type of a retrace based on where we're starting now with the steel dipping below. If we get cyan rising above zero, that would clearly indicate it, and then more likely than not, you're about to see a down pivot for your red. And if that crosses lower, unfortunately, it is what it is. Can't change it. All you can do is look at it and see what it is. Some people say to me, well, when's it going to turn around? Like they'll be looking at their stock declining. I can't tell you when it's going to turn around. We can only tell you when we see that it's going to turn around. You can't force it into anything. A good sign has been USO continuing its rise. That's been a steady increase, though. We can see that spread rising, holding up pretty well within that, but now we're starting to see the red dip below the white, so I would expect to see some retrace come back through there, which would correspond with some market weakness. No improvement for gold, still waiting for that turn. When it does happen, though, I think it's going to be attractive because you'll be retesting lows at potentially a higher level. The dip below the red line, though, you still have to respect it. Got to know that there's still some more weakness. Not even going to show silver because we know it's in the same boat. X, look at that from that sell signal. Hasn't been a huge drop. Every time we get to the green, it's been supported, but you're still very negative in that, though you're reaching oversold, but you've dipped below the red line, so the potential is we could still see some weakness. So can't give you a clean buy to that one. It's still sell calls when you get the opportunity. Likewise with X, looking identical, and I think this is the same thing we were looking at with WLT. I know we were looking at the daily the other day, and it was still well within the sell signal. CLF is, and here's WLT. So you can see that that came up, but that was within a strong sell signal, not just from the 78 minutes. Why I said every time we got towards the 8, buy back those puts. Then when you dip down, unfortunately, we hadn't gotten a new buy signal yet, though potentially another one's coming. So I know everyone says, "Oh, it continues to get down," and that's fine because if you still own stock, you sell calls at the higher strikes and keep trading them back and forth. You really can just keep lowering cost base on something like this and acquiring it on the dips for when they pop. So always fun to trade stocks under trouble. I remember doing that with X, gosh, when it was in the $60 range, and it's a piece of cake. Just you have to be patient with it. They do take time. GCP was another one that we had talked about. Also one that had been completely depressed with that nice buy reading off of the higher extreme, and from 726 to 818, that's been a nice run. So you can see the difference between a stock that was in the sell versus when it turned to the buy, and nice crossover proceeding. So all in all, that was pretty decent. Yeah, no objection with that. That's just a good looking rise, though now you could begin to see a little bit of pressure. Cyan's about to move back. The steel is now dipped below. If the red and green can stay above and the steel moves below, it'll get into the safety zone, and then you'd have an even further continuation back up towards the 9+ range. So that could be potentially a decent one. And our 50K, the perennial that everyone discounts over a year now, looking at this thing continuing to go strong, moves its stop to 1856. If we look at the performance report, we can see that this will take it to all new equity highs if it's successful based on where it's at with its summary. That's where the current profit and loss is on the trade. And again, it's one of those where only 50% profitable, but that's all it needs. And as we've pointed out, it's had plenty of moves that we would have looked at and said, oh, no, let's put a stop in there, get it sold out, repurchase at the new, buy signal down lower, and then let it go. So properly managed. And this is why some people say to me, oh, well, I'd love to have this automated. And I don't think so. I think you're better off setting up your OSO orders where you can just trail your stop, which is just an order sends order, and you can do any kind of trailing stop. Most of them will allow you to put in a set value, and for TradeStation, it's very easy. You can just slide it up, and in this particular case, you just set it to the stops that come up on it, and it doesn't make it that difficult to follow. Because the reality is there's still plenty of these 10, 15 point moves that retrace themselves that definitely we would get, and as the programs that I'm working expand, it will get better and better, but this is still pretty darn good. Not many are able to overcome those profit factor numbers are still pretty solid. Let's look at the intraday real quick. So this is like a great perspective to show it. So we look at the action that took place prior to the holiday, and then you can see the number of bars in a day post that, and like volume wise, people always say, oh, how important is it? Well, with a tick chart, not very, because you can see far fewer candles, so easy to depict. So we had a small retrace there, turned around pretty quick with green candle, but then it got overbought as we came up there, and it just came back and retraced the lows. I typically look for these. Sometimes you're never going to get the exact peak to it, but more often than not, these come back to retrace a good portion of their dark color. And that's just a matter of looking for the sell, and it started right over here, which was the cyan. moving above, same point, steel cross below, and then red started to roll over just a little bit. You even could have waited a little more. You would have had to face some heat to it, but then it did retrace to it. And then it gave a nice buy signal with the little cyan pop up there and took off. So not bad. Pre-market looks pretty decent to the upside at this particular point. About to get a nice buy crossover from modestly oversold, but you're going to be in the death zone, so that's really going to have to hold on to that. But it's early, so plenty of time for that. Let's go over some of the alert stocks. And here we go. A lot of people are going to want to be playing some of the earnings stuff that's coming up. So looking at dailies mixed with the intraday, though I prefer the intraday in general. The daily gives you a general idea if you're trading in between. But I find that we get so many more excellent signals from the alert stocks, literally from the intraday leading up to the earnings. You really don't even have to play the earnings a lot of times. So we can see Apple did a honestly decent buy, but that not the greatest setup right there with the steel again changing, but you did move into a new zone with the red, so likely to hold on. Now, was an interesting one, and I think we'll see it on Netflix. When you get above that plus 13.5, if you get an expansion move from it, even though you have broader separation of the cyan with the green, often does lead to gaps up. So something to look at. We'll look at it if we can find a stock that does it. Go to Amazon. So Amazon narrowed the range, got above the peak move there of the 13. Now, if that had continued, I would expect a pretty good size gap up. It did not, so it's just going to continue. It looks like slightly divergent to the upside. It's still a higher pivot from the steel. And you've broken into a new range. So the fact that you've had that spread means that his shorts are adding, but a lot of times in this case they're having to cover from that setup. So if it continues to expand, though, you have to be a little more concerned. Typically, you would be worried about it if that steel dropped down significantly. So that's okay from Amazon's standpoint. Look at Google. Google's still within selling those configurations. Nothing really thrilling about that. That spread started wider right there along with where you would think was a nice buy setup, but it completely broke down within that setup on the split. And if that steel dips below, that's going to even get uglier. So that's interesting to note. Netflix would be in the next one, and this is kind of what I was talking about, this move right here where it moves up and then continues. It happened once more, like right back here. Moved up and then boom, breaks up and creates a large gap up. It's done that several times, so it's not unusual for Netflix to do that. And so it's worthwhile seeing that because we had the decent little buy that came over here as it made far new lower lows on much higher extreme following there, even though that one would have been okay. It still had that huge spread. We started to narrow the other day. It expanded just a little bit, but you're almost breaking into that new range. So intraday, that would have been fun. Oops, I don't want to do that. Let's go on to like a PCLN. PCLN, unfortunately, likewise broke to the opposite direction with that, and that's going to cross below the red. So this one, if you get a little more dip of that steel, should begin a little bit of a retrace. It's not exactly a great looking chart there. Tesla had been ugly for a while. We were looking at the beginning of a pivot. Started to narrow. You had the crossover right here. We weren't in our deep red, which is fortunate because that ended over here. And we started a slight improvement on that, which left for some interesting opportunities day trade wise. I don't know that I would have been pleased with holding that until you get the actual crossover that just began, and now you have with the yellow right there. So that's actually looking a lot better compared to what it had been. Twitter closed the gap. Nice. I would expect that to continue to the upside. Got a little overbought, eased it off a little bit. You broke into a new zone here with the red going forward. Like that, when you see that, that's a good looking chart actually. Baidu formed its little spider split. Held up pretty decent within that because you broke into the new zone with the red, but Yeah, that's got to improve, otherwise it's going to start to get ugly fast because you've just made a, well, potentially lower pivot here with the steel. If that dips below, then I would expect this to retrace pretty significantly within that. Sometimes though, these, when you're looking at the daily, it could take a couple of days, is where having the intraday chart really helps. Even particularly with like yesterday, where the SPY though was kind of useless because it was so choppy, nothing really happened. It was sort of just a flat day. There's nothing you can do with that. FAS, likewise, flipping to the cyan above the saving grace, though, the breaking of the red into a new zone, enough power to hold it up. Didn't really prove very much. Still within what was deep red, so any beginning fade in this red, and that I would expect that we're going to fade pretty quick on that one as well. We'll do one more. Facebook. There we go. Um, Interesting. Power move up just gives opportunities for a short here. What you need to see, though, would be that steel dip below for that lower pivot, and that would be the opportunity to take it for a little bit of a short move. See if that. See, it comes critical right here as the red gets right to that negative 7.5 line, the little green one right here. And if it doesn't get over that and starts to roll over, that gets ugly really quick, and you would expect to retrace back down to the lows again. So, all in all, very interesting stuff. See if action picks up a little bit. That was pretty dry. Monday trading may take a few more days for a little bit of the activity, and as some of these earnings come through, should make it a little bit more interesting. But all in all, everything that we're seeing, we've been spot on with. So, can't complain about that. As always, trade well. Look for me on StockTwits, private Twitter feed. We'll talk again later.